Good evening, everybody. Welcome to the market strategy session for May 31st, 2015. Looking at the coming events for the first week in June. Hope everybody had a wonderful weekend. If you're in Chicago, congratulations to the Blackhawks. If you're in Tampa Bay, congratulations to the Lightning. The Rangers really choked. Unbelievable. Well, that's what happens when you can't score in 3 games on your home ice. Unbelievable.
How did they choke?
All right.
How is it a choke?
They couldn't score in 3 games on their home ice. That's a choke.
That's not choking.
That's a choke.
That's not a choke.
That's a choke. That's a choke. Got to be able to score on your home ice.
Yeah, that's not choking.
What's choking?
Choking is being up 3-1 and then losing the game 4-3.
No.
Yes.
That's hockey. Got to score on your home ice. You can't win if you can't score on your home ice. All right. Let's look at the economic reports. 10 a.m. on Monday, we have ISM Manufacturing. Fisher speaks right at the open. Don't know what that's going to do for us. The ECB press conference is Wednesday, and we have trade balance. We have ISM non-manufacturing PMI at 10 o'clock. 7:45, if you're up that early, you have the minimum bid rate in the euro. That's the rate announcement. Thursday, the weekly unemployment claims, but Friday is the big guy or gal. You don't want to be sexist. The job numbers are Friday at 8:30 in the morning. Dudley speaks at 12:30. And then OPEC meetings, so that's going to be interesting. The effect on crude oil. Now, last week, the GDP was a disappointment. I don't know how that will long-term affect the market, but I read an article today that said Obama is the worst president ever as far as the GDP, since it's been tracked since 1947, and he's had the worst decline in the first quarter in history. So I don't know. I don't know what that means. I mean, his term is up anyway, so I don't know. Maybe they'll use that to keep Hillary or the new Democratic nominees who really have
Although
no
he's the
chance.
second best president of all time for the stock market.
There you go. Next to Bush.
Far be it for me to defend Barack Obama, but facts are facts.
So he was the second best in. Okay, I don't know why. Oh, I'm showing my old chart here. Sorry. So he was the second best president for the stock market. Well, that remains to be seen, right? Doesn't he have another year and a hook left?
He does, but to this point, almost every point he was always near the top.
Yeah. Well, what happens if it falls from here?
TBD.
That's right. To be determined. All right. So last week, let's talk about the market real quick. The S&P broke down out of a wedge, but didn't go very far. Almost made back everything it lost on Tuesday, right back on Wednesday. Maybe my days are screwed up here. Hold on a second. Oh, I'm sorry, guys. For some reason, I can't. Do you believe this crap? Only me, as they say. There it is. All right, we got it. So Tuesday almost made it back. Wednesday, Thursday they paused. Friday they pushed it back down again. So the question now is this going to be one of these little rinky-dinky pullbacks? Or are we going to get a deeper pullback here? Again, we are back inside the range that we have been in for many months, as Paul will, I'm sure, show you. But the question is, are we just going to go back to sloshing around in that wide range? Or are we going to look for support maybe in the middle of the range and then try to turn and break it? Paul will have to confirm this, but what I looked at so far, I did not see anything that suggested a high is in. I did not see anything that suggested a blow off top or that, okay, the highs are in and from here we're just going to go straight down. So to me, it's still wait for this pullback to end and then look to get long again. Now, Paul may disagree with me, and that's fine, but we'll leave that up to him to see what he has to say. That's it. That's all I got to say. I'm going to hand it over to Paul, and he's going to go through the indexes, the sectors, and his opinion on what we are going to do on the short and, I believe, intermediate term. And the Rangers did choke.
They did not choke.
You can't not score on your home ice. It's the most ridiculous thing ever.
Oh, okay, Mr. Double Negative. You can't not. That doesn't mean you choked. It means you lost.
If you did it one game, you could say it's not a choke. All 3 games? Come on. I mean, seriously.
Same thing happened last year in the finals with Jonathan Quick and the Rangers offense. Good D always wins. Always. Defense wins championships. Look at the Bears. Look at the Ravens. Remember when the Ravens pounded out the Giants, whatever it was, 44-0? You say the Giants didn't choke? Beat by a better team.
The Giants did it. Oh, goodness gracious, man. All right, whatever. The Giants didn't play 3 games at home and not score any of those 3 games.
How about when the Diamondbacks beat Mariano Rivera in the World Series? Do you want to say he choked?
No, he's the greatest closer in history.
Maybe the greatest pitcher in history. All right,
he's not the greatest pitcher in history, but okay. All right.
Arguable.
Okay. Have fun.
All right. Here we go. Oh, wait. I got to pause for 1 second. Hold on a second. My kids are yelling.
Back while he's pausing.
All right, I'm back.
Okay.
Although you can chat if you like to.
Gonna...
So we came into last week, and I'm going to repeat what I had said. I mean, if it's like the last, I can't remember how many times. And that was, I continue to believe that the market is not ready to break out for good, and breakouts can kind of sort of be sold. And so sell strength by weakness until proven otherwise. Last week, the action this past week probably caused me to get a little more negative than I've been certainly all this year. And in a while, not that I think we're going to have I don't believe we're having a 10% decline. So let's get that out of the way to begin with. But I do think the downside potential far outweighs the upside potential here. So now I guess we can do it on any index. It doesn't really matter. So here's the Dow. We closed roughly 18,000. I got to believe we are... 18.6, 18.7 is our upside potential, and the downside is, I don't know, 1,000 points maybe just below the significant lows. So your upside is 600-700, your downside's 1,000. Downside outweighs upside, at least to me right now. Sentiment is still overdone to the bullish side. Doesn't mean it can't go higher, but it's going to make it more difficult. You've got the sentiment surveys are pretty baked. People are pretty bullish. Some option numbers are not as bad, but they were coming off. Asset flows, amount of money in money markets are all a little bit, people too, a little bit exuberant. So I'm a little less excited than I was a week ago. And I did take some chips off the table this week. I wish I could say I did at the highs, but I didn't. We'll see what turns out. So I think, again, 18.6, 18.7s are our ceiling, and roughly 17,000 is our floor. S&P looks just like the Dow, so our risk is probably down into here at these key lows, and our upside is whatever it is, 4% higher maybe. We could continue to move out sideways and bump around like this. Oops, my mouse stinks. And maybe that works off some of the bullishness down the road, but right now I don't love how bullish everybody is. Mid caps drop stronger, but still I think we're going to go a little bit lower. IWM, small caps, which I do own. In the indices I own small caps and I own the Qs. So small caps, the price pattern is lagging, but on a relative strength basis, I like the recent action in the small caps. So nothing to write home about. We're still penned in this range right here. Nothing really exciting. All the stochastics are overbought. Doesn't mean a whole lot until we actually price rolls over and we draw them down. And the Qs, price-wise, look a whole lot better to me. But still, the Qs ain't going to go much higher without every. This is not 1999, 2000. The Qs are not going to go up 10%. The market go down 10. I don't think that's going to happen. But my money in the short term is small cap and the Qs. Europe, which I do still own, did not have a good week. Gap down last Tuesday. Here, gap, we traded lower, and we're already breaking down. You could certainly call this an island top right here. Europe could pull back, another 5% really easily. Could do it in 2 days. So FYI there. Emerging markets got thumped on Friday. The EEM is taking it on the chin pretty good, which I'm not long, but I am long with the same three countries I've been long. China got thumped pretty good. Okay, so we were in this bullish consolidation digestion. Now we're poking down at the bottom of it. So that's not a good sign. That's one. Hong Kong, which is similar to China, not the exact same thing. Hong Kong busted out of the flag pennant here and is right back in the flag. That's not a strong sign at all. And the Philippines really took it on the chin. They broke out of the bottom of the pattern, and clearly now this looks like, to me, a pretty significant top. So what am I going to do here? I'm going to sell the first rally and get the heck out of EPHE. Wipe my hands. I'm guessing I have a small loss. I'll get over it and move on. So those are the major indices. Before you guys ask, here's Brazil, which I have not been excited about for a long time, and I think we're probably going back towards the old lows in Brazil. And Russia, which you guys love. I'll say the same thing I've said for 6 months. Here's the time to buy it. I cannot in good conscience tell you to buy it up here because you're right into the gap closing and some overhead supply. So maybe after this decline we're having right now in Russia, it gets a little more constructive, but I don't love this move right here. All right. Any questions on the major indices? Any questions on the major indices? There's the Q's topping. I mean, David, I don't think in a vacuum you could call this a topping pattern yet. It's possible, but we need more deterioration. I'm less sanguine on everything else. Therefore, it's hard to love the Qs, although I do own them. What positions I do have left in the indices are in the Qs and the small caps. We'll get to the dollar in 1 minute. Do the mid caps have a lot of international exposure? Answer is no, Gavin, they do not. John, do I use stochastics to make trading decisions? Absolutely not. Stochastics work really well in a trading range, and they will absolutely rip your face off in a trending market. So I use them as a frame of reference. When we're in a trading range like we've been, they've done a pretty good job, right? When we trend like here, they get overbought really quickly, and then the market still blows off to the upside. Alrighty, let's move on to the 3 key sectors. Let's go banks, which I am. You guys know I've been forever negative, and I recently started getting really positive in the banks. I think this is the second half of the year story, and I'd be a buyer of banks into weakness. I think second half of the year, banks are going to be a place to be. Transports. I keep waiting. I do not own them. I haven't owned them all year. I don't think I've owned them all year. Maybe I owned them early in the year. But in any case, they are taking it on the chin. And with this breakdown, there's no real support if you're looking at just a chart all the way back down to this low, which is a pretty big decline. So we'll see if the bulls can muster some kind of stand before they get to 7,700. But they look crummy. We all know, the airlines. What's that? Jets is the new ETF. Jets. Airlines let them down, and then we got some other stocks that are following lower. So hard to. I mean, transports are rated negative. Banks rated positive. Stocks will break the tie, and the stocks look pretty good. My theory has been all along that the stocks, the banks, and even the trannies step up. Stocks have stepped up, banks have stepped up, trannies have not. But 2 out of 3 ain't bad, as Meatloaf once said. So stocks look pretty good. You got Intel's about to buy Altera. Here's Intel. Certainly not the hallmark of stability and profits. I think Altera looks like a stock being taken over, doesn't it? All these big moves on rumors. So the sectors so far are not in bear market origination phase, although the transports certainly are. If the bear market started today, which I don't think it did, the transports, that's how they'll look. They'll break down before the Dow, or vice versa. Let's go to the others. Software still is pretty good. We've been talking about it for a long time. It's looked good for all year and then last year, so that still looks good. Software, no arguments, done nothing wrong, has beautifully consolidated up here. Telecom, I think, is going to be a second half of the year story. I don't like this. This solid weakened change of red. I don't like it. Does not inspire confidence. And now we're just digesting it. You can't be surprised if you get a move, down back to 28. So this is one of my sectors of the year. It's not living up to billing yet. Maybe second half of the year. Consumer discretionary. So I guess I'm going to pause. Do I want to pause here? Yeah, I'll pause here. So I did an interview with Investment News Friday about the GDP report. So the GDP print was awful. GDP contracted. The economy fell by 0.7%. The preliminary reading was growth of 0.2, so it basically fell almost a full percentage point. People had expected it to fall 0.9%. And so let me say this. I totally and unequivocally dismiss the negative GDP report from Friday. I think it's smoke and mirrors. The government seasonally adjusting quarter is wrong. The government's done a crummy job seasonally adjusting the GDP numbers. There's a reason why the market didn't care that much, and that's because look at the consumer discretionary. This is the horsepower of the market. Barely went down Friday. If the consumer really was in trouble and the GDP was collapsing, you would not see XLY a whisker from all-time highs. So I think you're going to have very strong growth in Q2 and Q3. XRT, weaker, retailers weaker, but certainly not death by any means. I think they could probably pull back another couple of points or so, maybe 4 or 5%, but I don't think it will be the end of this run. And my home builders, you could say it's a head and shoulders before you ask what the volume is. I don't really love ETF volume. So you could say this was a head and shoulders. The stocks themselves don't bear this out. I think this ultimately is going to make a new high second half of the year. Let's see. Industrials, real economically sensitive stuff, does not look awful. Looks boring. Looks like a pair of twos if you're playing poker. So not supporting a horrible GDP print. The market does not look like we're headed into a recession. Materials also. If the economy was teetering, materials would not be this strong. Energy, XLE, has faded fast last couple of weeks, just in very small bits and pieces. OH, which I still own a small piece of, I think is hanging in okay. It's essentially gone sideways to work off this huge rally. The key is going to be when it gets fully oversold, can the bulls muster a move to new highs? That's going to be the question. Are we going back, which I think, to 42? But it looks okay to me. Defensive stock. So if GDP was so bad on Friday, you would think the defensive stocks would be really good. Here's XLU. Hard to say this one is a real powerhouse. REITs. Hard to say this one's in great shape. And consumer staples is not rocketing higher on weak news. So that's why another reason why I continue to dismiss the GDP report. And let's see what we got. We got healthcare. I am still long healthcare. I did do some selling on Friday in healthcare, FYI. I have the bulk of my position, but I trimmed the edges to raise some cash. Same thing with IBB, my other big position. I still like them, but I just trimmed my holdings down to own some cash. So let's see, did I miss any sectors? Let me think for a minute. Let me just take a look at the ones. Here's the internet index. Okay. Social media. So this room looks nothing to write home about. You guys like TAN, the solar sector. This was the news about the China company, and this thing looks like the top is in, and it looks like these stocks are headed much lower. And I'll pull up gold right now. Why not? I bought some on Wednesday and Thursday. I bought GDX. I did a tiny bit of selling on Friday. I'm going to give the bulls the benefit of the doubt. I want to see this move out immediately this week, first couple of days. We take out the lows, I'm getting out. Get a very, very, very small stop in. So that's it for sectors. Let me see. So ask your sector questions now, if there are any. I already own XLF. Should I hold on? Terry, should you own it? I don't know what your risk parameters are, so I can't tell you what you should or shouldn't do. I like the other financial ETFs a little better. But for my money, I would definitely own some cash here. I don't think we're taking off to the upside quite yet. I do like financials, especially the banks. I would just play it really tight right now. If the retailers are hanging on, does this mean J.C. Penney could pop? You know what? I don't even look at the chart, but I already know this stock. Your guess is as good as mine. You know, there's a chart. So I'll repeat that. Your guess is as good as mine. I have no idea on this one. This one does not correlate well with the XRT. It's kind of beating to its own, marking to its own beat. Let's see. Let's go back to your questions. What percent growth would be needed in Q2 for the market to consider the number upside surprise? Gavin, it's so early, hard to say. You'd have to wait until probably the end of June, because I couldn't tell you. I do think second quarter GDP is going to be right now at 2.5 plus. Wouldn't rising rates hurt the home builders, John? I don't think that I didn't say rates were rising, but even if they do, as long as they rise really slowly at a measured pace, the builders will be fine, in my opinion. Is it ever worthwhile to follow unweighted indices? Greg, I love RSP. If I can even type it in here. RSP, so if you guys asked me, you know, you could own one security during a bull market, can't touch it, blah, blah, blah. You don't want the risk of an individual stock. I own RSP. It's an equal-weighted S&P 500. Does really well, usually in a bull market. All right. Any more questions before I move on? No. Okie dokie. Let's go to the dollar, gold, and bonds. So here's the dollar. Last week we talked about that. It could have a little more upside to it. Well, we got a day out of it. We got Tuesday out of it. And now it's consolidating nicely. So I wouldn't be surprised to see the dollar have another pop here, above 98, maybe get back to 99. I don't think this is the peak. I believe the dollar is going to still go much higher. And if the dollar eventually goes a lot higher, it's hard to imagine the euro not going a lot lower. So I think, as I said up here, you can sell the euro into strength. Have a loose stop, small size, but I think you just sell the euro anytime it pops. Same thing, I'm talking about the yen, negative, 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 and last week the yen finally fell out of bed once again. So as long as I've been doing this with Tiny for years, I've been negative the yen, and I think it's still going lower. But I don't want to sell into weakness. I want to sell into strength. That's the yen. Let's see. We did the dollar, we did the yen. Someone's going to ask me about the loonie. Here's the loonie. Sentiment is so negative on it. You've got a couple of reversal candles in the last week. It's probably worth a shot to the upside here with a tight stop below the lows, so you don't get ground up on if they continue. But loonie's probably worth a shot here. Okay, and let's go to TLT, which, as I mentioned last week, I bought back. Oh, no, I didn't mention it a lot. I can't. You know what? I own TLT again. Now I don't remember when I bought it, so my apologies. When the heck did I buy TLT? That's good. Okay, senior moment. I own TLT again, only because it came up in my global macro screen. It's not an opinion. It's a system, and I just buy it, so I am long it. Looks like it's just snapping back. It does not look like it's going back to new highs or even above here. So let's look at the bond yield on a 10-year. Yeah, looks like we're going to bond yields come back a little, pull back a little bit, which means TLT rallies, and then they head higher. Gold, 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 gold. I like the GDX better than I like the price of gold, frankly. But I'm in. So where do I think gold could go? I think the upside is limited. I think the upside is probably the top end of the range, and the downside is new lows. So I got to play very carefully here because I don't love gold. Silver, kind of sort of the same thing. Nothing. Another pair. A lot of securities are a pair of twos if you're playing poker. Not great. They're not awful. Somewhere in the middle. Copper fell out of bed. I said this last week when I really liked copper up here for a breakout further, higher, and then it fell out of bed and you have to get out and walk away. And now it looks like it still wants to go lower. So I would stand aside and wait for some kind of bottoming formation in copper. Natty gas. I mean, the bulls are so long natural gas, and they cannot get a rally going. Talked about it last week where this looked like the peak right here, and now we're pulling back. I mean, you step aside, you stand there and wait again, but I would not buy natty gas yet. I want to see some kind of reversal first. Crude oil and unleaded fuel, the RBOB, had really nice days on Friday. I still own my my crude oil and my unleaded gas, my RBOB. I still think it's going higher. You know, I think 65 has been my target since the collapse started, and I think we're going to get there. And that'll mean a 50% rally from the low. Oh, it doesn't really look it. Let's see what else. What did I miss? Oh, I know what I missed. All right, let's go over here. Here is the NYSE AD line. What happened? Okay, what? Oh, that's why. Okay, those of you guys have been here week in and week out. What's my takeaway from this chart? What's my takeaway from this chart? While you're typing, David said, did you say smart money? Yes, David, I did say smart money was long natural gas. It is not called smart. David, I don't understand your question. Repost something different. I'm not sure I follow, but I'm happy to answer it. All right, those of you guys have been here week in and week out, what's the takeaway from here? I get some partially right answers. All right. Kit is the only one. Thank you, Kit. And Kit said, there is now a divergence, meaning the Dow made its all-time high right here, right where I'm circling. Yes, it's a lower high here, but the key is the Dow made an all-time high here. The AD line did not. That is a divergence, and that is a warning sign. The first warning sign like this in a while. Could this be a signal of the end of the bull market? It's possible, but not likely. But we do have a divergence here with the AD line finally diverging from the market making all-time high, which shows less stocks participating in the move. Definitely a warning sign. I got to do a canaries in the coal mine this week. I got a lot of articles to write this week. But unfortunately, no time. That's going to be a problem. All right. Good job, Kit. If I had a T-shirt, you win a free T-shirt or a Starbucks gift card. Here is junk bonds, JNK. Okay. I still long junk bonds. I mean, it looks like right now on the surface that these want to break out to the upside, which would be interesting because the stock market is in the opposite end of that right now, which is unusual. Normally the other way around. So bull markets typically do not end with junk bonds looking this good or that close to new highs. So we have a couple of warning signs, just not all in place yet to end the bull market. Okay. Let me go back and okay, we did oil. Let's do let's go to the grains. All the grains I'm going to pull up, the bulls, the smart money is at or near record longs. But just because they're record long doesn't mean the security is going to go up. Here's wheat. Bulls are locked and loaded to the long side, and there's no sign of a real rally yet. Okay. But anytime you see a bottom here, like a reversal, you got to give it a shot to the long side because smart money will eventually be right. Here's corn, same thing. Smart money is locked and loaded long. However, does not look good yet price-wise.
And the smarter money was short. We had it short this week in the newsletter for 10 points so far. So the smarter money is short.
And soybeans, again, this is record level of longs in soybeans from smart money. I mean, it's hard to get excited about this bottom. You know, I'd much rather see if it comes and takes out these lows first. Let's go to sugar. Smart money locked and loaded long sugar. I mean, I said last week, don't do anything until we see how it reacts to the low. So far, there's no good reaction to this low in sugar. So to me, you sit and wait. Cotton, oh my God, nothing. I mean, just not giving us anything. This is how commodities bottom. They frustrate the bulls and the bears for a long time, and then they have put on a huge move. Cocoa was really nice, pulled back this week. You know, probably in no man's land. It should maybe we pull back to the breakout level and then go, but nothing really exciting on cocoa going into this week. And Starbucks coffee is nothing. Fell out of the bottom. Lots of longs. Hard to get excited about this low yet. So unfortunately, every single commodity looks, I mean, you know, agricultural commodity looks eh. Here's the ag ETF DBA. Hard to get excited about it. The big commodity ETF GSG. This is simply because of crude oil, the recent rally. That's all. Everything else has been in the crapper. Let's see. Any other questions, comments, concerns, things I didn't mention? Don't ask for stocks. That's not my area of expertise. I'm not sure I have any area of expertise, but I know it's certainly not pulling up stocks. Any questions? If the economy grows at 2.5% or more, and what's the downside for T? I don't have a downside yet in TLT, although I think if the economy was really on its arse, TLT would not have done this, would not have collapsed already. I think TLT's collapse so far is based on the market's premise that growth's going to reaccelerate in the second quarter. So 2.5% second quarter GDP, I don't think does a lot to TLT either way. 3% gets TLT going to the downside again, I think. OIH up or down, Peter? Yes, it's definitely going to go up or down. I still own a small piece, so I think it's going to go up. S&P direction this week, May. This week, I don't think I have a strong opinion. I think the upside is capped, and the downside's got a little movement to it. So, again, I think we got 4 to 5% on the upside and whatever that is, 8% on the downside. That's my range. Is it this week? I don't know. Although I would sell any rally to new highs, if that helps. Can I comment on the euro? Yes, sell any and all strength in the euro. I'm not going to like the euro for a long, long time. Sell any and all strength. Terry, no upside target yet. We'll update it during the week once, or if they get going. My long-term opinion on Europe is the next decade after 2019, it's going to be a great place to invest, just not right now. But I'm long it for a trade. I just think they've got some major. France is the too big to fail, too big to save. So that's the big one. The rest of Europe's irrelevant. Is Germany going to bite the bullet and take on everybody's debt? Not right now, they're not, which is why you got Europe in a problem. But they're QEing, they're just not printing enough money. What would it take to get me bearish? Read the AD line. A lot more internal weakness, Nandita. I'd want to see the stocks underperform, high yield rollover, a laundry list of things. I don't think it's here though. Well, a strong dollar rally hurts stocks. John, markets rally. So many of our great bull markets have been on a strong dollar. So don't get. I've said this for a long time. Don't get hung up on the media's assertions that strong dollar is bad for stocks. It is absolutely not, and I'll prove it to you right now because I know you're going to doubt me. Here's the dollar. Here's a weekly chart of the dollar. It went vertical from the middle of 14 to early 15. Gee, so did stocks. In 13, the dollar essentially went nowhere. Stocks went vertical. The dollar collapsed middle of 10 to early 11. Stocks went vertical. '08, the first half of '08, stocks were down 20%. So was the dollar. Dollar fell hard '06 to '07. Stocks rallied. The dollar rallied in '05, so did stocks. There's no correlation. I can go back to any period you want. So just be careful. Let's see. Would you look at Euro Bund? Terry, I'm not sure what a Euro Bund is. I know what a Bund is. I know what a Euro is. I'm not sure what a Euro Bund is. How do I feel about ETFs that have the Euro hedged out? I think they're novelties, Jay. Whether you play it with or without the currency, I think you're still going to make money. But I'm fine if you want to do it that way. No problem. And early in the year, last year I bought DXJ in January of last year. And I'm still really happy about it because where we bought it, $50, it's now $60. Looks good to me. Better than a hot poker in the eye. What about Shanghai? I think China's still going to go higher. China's going to go higher because they're getting dovish monetary-wise, and they got all that money stored up in banks. The government has no debts. Currency is a little more free-floating. I think China's going higher. Do you think U.S. is in third industrial revolution? I'm not going to give you a flip answer, May, because I haven't given that much thought. But I don't think right now we're in an industrial revolution. But I really want to sit on that one for a while. EEM looks crummy. I think you got to look at the countries, not the EEM. But I don't love EEM right here. FGBL. Somebody asked us the other week. Nope, not on it. FG. Yeah. Okay, last call. Man, I'm so bitten up. Holy jeez. Last call. Going once. My blog is investfortomorrowblog.com. And this week will be tough to post a lot because I'm with my biggest client tomorrow in his golf tournament, and then Wednesday I'm in New Jersey. Do you trade Chinese stocks? I don't trade Chinese stocks per se. I trade ETFs that are supposed to be correlated to China, like FXI. But I say supposed to be because the correlation is anything but perfect. All right. Anybody else? Going once, twice, 3 times a lady. All right. Mother Nature gave me some water, planted some more grass. All is well. Kids are happy. They're quiet. All right, everybody. I'm dating myself. I just heard the 3 times a lady on the 70s channel on Sirius when I drove home from my daughter's dance recital. Yeah, I'm all bitten up from. I coach my daughter's softball team and my son's baseball team, and bugs are brutal right now. Essential oils. Oh, okay. How does Tiny trade versus me? He's right and I'm wrong. That's how it usually goes. We think alike. However, we have no trouble being on opposite sides. So, peppermint.
Very, very short term versus longer term. Paul's longer term, even by weeks, or days. I'm more short term, day to day, hour to hour. Stuff like that. That's the real difference, I think.
Lavender mix. All right, Terry, I'm going to try that for our games this week. I'm going to load up on this essential oils. All righty. Tiny, you can answer Greg's question. That's you. Or not.
I don't know, Greg. Some people are asking, but
I
don't know. People just ask all the time. It's such a. Maybe Paul wants to run it. I don't know.
So I'm going to give this the line I gave the other night, coaching my daughter's team, and I put in a pitcher we were up 5-0. I took our star pitcher out, and I put in another girl, and she gave up 4 runs in a blink of an eye, and my other coach said to me, I'm pulling her out, and I'm the head coach, and I said there is 0% chance I will ever pull an 11-year-old girl off the mound in a game. You don't do that. And there's 0% chance I would ever run a trading room.
That means look for a trading room soon.
Zero.
Yes.
Get a better shot at me voting for Obama.
Yes,
Someone asked about telecom. I just said I hate these really strong red candles. That's serious selling. And this looks like a consolidation of this. Now maybe it's a complex bottom forming, but I don't want to go near this right now. I'd rather sit and wait it out. What's one of the best ETFs for the summer? Then we talked about a bunch already tonight. I think the second half of the year, financials are going to be a place to be. I don't want to start loading up now. I sold some stuff last week, so I'm starting to raise some cash. But later on, June or July, we'll get some kind of good bottom to buy into. May, that's a question for Tiny. I don't know. Tiny, you trade any stocks? You have some stocks under $5.
Yes, we call stocks under $5. Not yet, but we will.
All right. Going once, twice. Benito. All right. Everybody have a great week. Enjoy.
Good night, everyone.